Good afternoon and welcome to the Paris Peace Forum and to our discussion titled Bridging the Solidarity Gap, Bringing Forth the Best from Financial Instruments. My name is Giorgio Leali. I am a policy reporter with Politico Europe, and I have the pleasure to be here with us with the Managing Director of the International Monetary Fund, Kristalina Georgieva, who is with us online. Welcome. We have with us also Macky Sall, President of the Republic of Senegal. Welcome and thank you very much for being here. And we also have Akinwumi Adesina, President of the African Development Bank. And our fourth panelist is Alain Deroy, who has been a top French diplomat and is now the French President Special Envoy for the Africa Initiative in response to COVID. So what will we be talking about today? We will be talking about how to bridge the gap between North and South of the world, which is the overall topic of the Paris Peace Forum. And we will look at this topic from a particular point of view, the one of financial instruments. And more in particular, we will be focusing on special drawing rights, which are a very particular instrument which played a major role in the post-pandemic recovery. So before entering into the details, I would really like to start with Managing Director Georgieva by asking you to please explain to our audience, first of all, for those who maybe don't know it, what are special drawing rights and why this summer in August the IMF decided for a special allocation of 650 billion. So Managing Director Georgieva, the floor is yours. Thank you.
Thank you very much. It is fantastic to join you, although regrettably only online. The topic cannot be more important. We published our projections for growth. The world economy is recovering. It is expected to achieve 5.9% growth this year, but for low-income countries, it is half that size, 3%. And that dangerous divergence is becoming more entrenched. Why? Because, as we know very well, there is still inequality in access to vaccines, but also because of very limited policy space for countries to move forward in their recovery with higher speed. This is why the special drawing rights allocation is so important. You ask me, what are special drawing rights? This is a reserve asset that the IMF is able to create on the back of 190 members, some of which have very strong reserve positions, and they can lend this strength to us and through us to the whole membership. In other words, we create it based on the membership's willingness to lift up reserve assets globally. After the global financial crisis, the IMF created $250 billion equivalent of special drawing rights. They came very handy at that moment of time. And as the number signals, we felt that in this extraordinary situation, the membership needs to step up even more. $650 billion were distributed to our members on August 23. What it does is it improves reserve positions and it creates liquidity. And that liquidity capacity is so precious for countries that have very, very tight fiscal space at that moment of time. When we distributed the special drawing rights, 275 billion went to emerging markets and developing economies. Out of this, 21 billion went to our poorest members. And Africa as a continent got around 31 billion. On one hand, great, because this does not add to debt. This is truly an injection of reserves and liquidity. On another hand, of course, countries that need help the most because of their shareholding, their quotas at the IMF, they get, relatively speaking, a small part of the SDRs. And that takes us to another conversation, and I hope we will have a chance to talk about it. How can we improve the position of countries in dire need of help on, on the basis of those who got SDRs but don't really need them, sparing some of their capacity on lending SDRs to countries in need.
Thank you very much, Director Georgieva. That will be indeed one of the next topics for our discussion. So we will look into how some countries could donate some of their SDR rights. But just before getting there, I would like to address to you, Monsieur le Président, and ask you what is, for a country like Senegal, the importance of this kind of tool, and which kind of concrete investments, concrete project could be funded with a special drawing rights. So more to have a national perspective and to understand how concretely it could work.
Merci beaucoup.
Thank you very much, Giorgio. I'd like to start off by greeting Kristalina and also Akin Vumi from the African Development Bank, Mark as well, who are part of this panel. Before I start talking about SDRs, I think we've got to come back on the actual crisis and its consequences. But I think we've also got to talk about the other tools that exist, because the SDRs are just one sort of tool that one can use. When the pandemic occurred in 2022, the economies were already very fragile. This is the African economies. They were made even more fragile because income plummeted, business more or less came to a standstill, frontiers were closed. So that was on the one hand, but there was on the other hand a huge increase in expenses, particularly for health purposes. And so the situation, because of the pandemic, was extremely difficult. That is, direct foreign aid and investments were also limited. They are, in any case, not as great as in Asia or in Latin America. And in fact, they went down to 40%. So by 25 to 40%. So you can see that all the resources were, in fact, very squeezed, and this is because there were no income coming in, there were borders that were closed, there were high outgoings, and this is why it was important to find a sort of social and economic resilience plan. And this, in the case of Senegal, meant that we had to set up these sort of plans. And I'd like to thank our bilateral and multilateral partners that helped us to set up these expenditure projects and plans, which enabled us to purchase vaccines, but also protect jobs. Jobs were threatened, and also made it possible for us to set up the right sort of fiscal support. But this is not sufficient. You need further capacity to actually purchase the vaccines and produce them in Senegal. And this is where SDRs are a special tool which would be very useful. As Africa doesn't have actually a Marshall Plan, doesn't have a printing press, so to speak, for currencies, doesn't have special deposits in the central banks. So the international system is such that it doesn't allow African countries without support from its international support and partners to face up to the crises. We're talking about vaccination where 70 to 80% cover in developed countries, but in Africa it's 5%. This is why it's important for us to produce vaccination in Africa, be able to purchase them as well in Africa. We all had about 5 or 6% growth rates in our country, but last year everything went pear-shaped, and many countries actually went into recession. Senegal itself went from 6.5 to 2. And you can see that if you look at what was actually brought in for Africa, 22 billion was actually in these SDRs was set aside for sub-Saharan Africa. The IMF, of course, very quickly changed gears so that it was possible. Senegal got $500 million, but that is not enough. That is just one side of things. We also asked the developed countries, those that have the capacities to survive with other mechanisms, other tools, to actually pass on their SDRs to Africa so that it would be possible for us to jointly be able to respond to the COVID crisis. Because if the African economies are not put back on track, in fact, it's going to be extremely difficult. And nobody would be able to hold back people who will seek better existences or lives elsewhere. This is why it's really important to develop resources in Africa as well. And this is why we think it's important to have a new deal to enable people to have new starts, change the way of thinking so that these countries in Africa can also have access to the fallout of development, because we must remember that Africa is 30 million square kilometers where we've got to actually build all sorts of infrastructure and work at all sorts of level. Water, roads, airports, trains, whatever. Everybody can benefit from that. And this is why we need additional SDRs so that we can get the 100 billion that we asked for in Paris. The French position in Bamako was extremely positive because 20% of the French SDRs were proposed. The United States also committed, China committed as well. We'd also like to ask the European Union and its members, because you could get almost 33 billion from the EU, and this way we will get the 100 billion that we asked for in May in Paris. So I think it's really a question of willingness, of having the right willingness and desire to help. And I think our colleagues and our partners do have that desire to help. We have worked very hard right away when the COVID crisis struck, and we worked together to set up vaccination manufacturing in Africa. There was a fast-track process, and this is what we have to do. This is what we need in the COVID and post-COVID world. This is to change the rules and change the way of thinking so that we have a truly committed approach jointly. Thank you very much, Mr. President. I think we have dealt with a very specific point when we're dealing with SDRs, and that is the question of transferring them. And this is what Kristalina Georgieva said, that the SDR is, of course, proportionate and is pro rata to the member countries of the IMF. And this is why those who really need the resources didn't necessarily receive them. And in the second part of our discussion, we will discuss this because many countries committed that they would transfer their SDRs to African countries. Let us now move on.
Development, and I think it's interesting so we've seen two actors, the IMF on one hand, countries like Senegal on the other one, but then in the middle there are financial institutions like yours, which play a fundamental role. So could you please explain us, for example, in the allocation of special drawing rights, which role the African Bank of Development will have?
Thank you very much, first, for inviting me to this forum. And I'm delighted that we are joined by my dear sister, Kristalina Georgieva, who continues to do incredible work for us globally, leading the global financial market stability in the middle of a terrible crisis that we have with climate and also for debt. So well done, Kristalina. Your Excellency, Mr. President, it's very good to see you, and thank you for your... In fact, after you finished speaking, I'm like, well, you pretty much said everything I needed to say and to actually say la rue. First is the fact that Africa just went through its worst economic growth in 20 years. GDP growth rate fell by minus 2.1%, which is the lowest that we've only had. And of course, more important than even that is the amount of lives that were lost, but also the fact that we also have a lot of poverty. We got 30 million people that fell further into poverty. If that doesn't change this year, maybe we'll have another 39 million people that will fall into poverty, and 30 million jobs that are lost, as President Macky Sall was explaining. So the impact is actually quite massive, and I think Kristalina also explained the macroeconomic impacts of that. But the thing is, what did we do as African Development Bank, as you were saying? We launched a $10 billion facility to support countries to deal with some of the physical challenges that they were facing. But in addition, we also launched a $3 billion Fight COVID-19 social bond on the global capital markets, which at the time that we launched it was the largest social bond that's US dollar denominated ever in world history. So we responded very, very fast. IMF also responded very, very fast and to support the countries. But the fact of the matter, however, is that we need to look at how much Africa actually needs to recover from this particular crisis. President Macky Sall was talking about the difference between Africa and the developed countries that have trillions and trillions of dollars, and Africa is just basically looking for only $485 billion by 2023 to be able to deal with that. And so, as the President Macky Sall was saying, you have a situation where today, even for the vaccines, you have developed countries having 3 doses and 4 doses and upgrades of doses. But Africa is just looking for a basic dose, just one, and we can't even get that. So it's the same also when it comes to this particular situation. Now, we've been working globally on this issue. And I think the special drawing rights provides a great instrument to support, of course, the countries with reserves in their central banks, but also to stabilize their balance of payments and all of that. But I have been talking quite recently about IMF is doing a fantastic job. The Poverty Reduction and Growth Trust, Kristalina, is fantastic, and also what you're also spearheading, which is the Resilience Trust at the bank. I mean, at the fund. However, I do think that we need to find a way of optimizing the global financial architecture better, because when we say we need to grow back better, well, it takes more than just simply stabilizing the central banks and putting monies on their balance sheet. We need to make sure education grows. We need to make sure that health sector grows. We need to make sure that energy grows. We need to make sure that we have agriculture growing and that we can create a tremendous amount of jobs to recover the 30 million jobs that we have lost. So that's why I think giving SDRs also to multilateral development banks that are prescribed holders of the SDRs, such as the African Development Bank, is something that we should look at. And I would say that for 4 or 5 reasons. First is the fact that the multilateral development banks that are prescribed holders of the SDRs are literally what you can call leverage machines. We can leverage those resources significantly. So, for example, for us as African Development Bank, if we got, for example, $50 billion, that becomes $200 billion for African countries, to support President Macky Sall and others and so on. So leverage is first. Second is that the things we need to also grow back, education, the health, the agriculture and so on, or energy, they are sector areas. And these are areas in which multilateral development banks have very clear mandate and comparative and marginal experience in doing. And you also will need sector policies that are sustainable to do that. In addition to that is that we have public development banks. And the public development banks is like you have rain that is falling. The rain has to go on the ground and go right to the roots. These public development banks, like the West African Development Bank, the Development Bank of South Africa, and several others, are the ones that will actually make sure there's a percolation of the resources to where it's needed. And so we, as African Development Bank, will finance them if we get this to be able to do that. Now, the President Macky Sall was talking about the issue of debt. Now, I'll give you one thing. 12 countries, Kristalina, 12 countries of Africa have gone to the issued in 2010 to now Eurobonds of what, about $112 billion. Now, if we use the equity with the bank, if we had the resources and they borrowed from us, we would have saved them interest payments of $53 billion, right? So that means that using this SDR, if we get it and expands our equity, we'll be able to get the resources to support the countries, so they are not going to have all the amount of debt that they have. And I think President Macky Sall put his hands on it very clearly when he talks about jobs. When we talk about youth, about women, and so on. I just want to end by saying that maybe. Kristalina, maybe we should call this SDRs something about supporting development revitalization. That way we can have the MDBs working with you side by side to make sure that not only do we stabilize things for the central banks and balance of payment, but also grow the sectors back. I think this is what really matters, that we stabilize not just central bank, but stabilize lives, revitalize lives, and this is very, very critical that the SDR will hit ground where it matters, as President Macky Sall really said.
Thank you very much. So a key issue we have seen is really how to make sure that this special drawing right can be transformed in actual investments, and how this will have a very important impact on different policy areas. President Macky Sall has mentioned, for example, vaccine and health policy, how it can be helped by special drawing rights, but there are also other impacts, for example, on migration and also on the sustainability of debt. So we have also said another important thing, which is the amount of special drawing rights. And we have seen that the amount given to Africa maybe is not proportional to the need of that continent. So that's why several countries, and lately the countries of the G20 in their meeting in Rome at the end of October, have pledged to transfer part of their special drawing rights to other countries. And France has been in the front line in this proposal. That's why I would like to ask you, Monsieur Leroy, just to remind, he is a special envoy for the French president for the Africa initiative in response to COVID. So he's really the person working for the Élysée on this specific project. So what is the pledge made by France and by other countries, and why it is important also from a French perspective, you think, to transfer part of this DTS?
Merci.
Thank you. Thank you to all of you for your contributions. And to answer your question, France has suggested lending 20% of its SDRs to countries most in need. And this has really paved the way for others to do the same. Now, the questions that have just been asked were a part of the Forum on the Financing of African Economies on the 18th of May. And President Macron at the time said that the COVID-19 crisis, of course, affected the entire world, but certain continents are in a better position to respond than others. Europe has the European Central Bank and quantitative easing, which allowed it to put in place a $750 billion plan. The Fed also in the U.S. pledged over $1 trillion. And not all continents have that kind of capacity. And of course, it is essential that Africa, like other continents, be able to recover. And so, as Madam Georgieva said, Africa would need $185 billion to recover from the crisis. And that is why these SDRs are so essential, and that is why France and several others pushed for this $650 billion in SDRs along with other countries. And $33 billion have been provided to Africa so that they can procure vaccines in addition to the ones they're receiving for free. Of course, we are still far from the over $200 billion that are required. And as Madam Georgieva said, some countries do not need these SDRs at the moment and could transfer those rights. Now, what would that amount be? Now, President Macron said, and others have said it too, that ideally developed countries should be able to transfer $100 billion. And it was a pleasure to see that in Rome, the ideas of the Paris Forum were taken up, and the pledges that were made were extremely high, $45 billion. France has pledged 20% of its SDRs. That's 5.5 billion. And France has already budgeted over $1 billion as part of its budget. And so, so 5.5 billion in total, of which 1.5 through a IMF mechanism. Italy, the US have also made significant pledges in Rome. Canada, 3 billion, Italy, 4 billion, Australia, 350 million, South Korea, and more. Some countries, however, have not given numbers. China said it was on board but did not provide numbers. Now, other countries have, and so perhaps China and Russia will put forth numbers. We are hopeful that they will and are working on it. Now, among the questions that were raised, there's also the issue of IDA 20. So these decisions that will be made by the end of December, and with the president of the World Bank and Madam Georgieva, we are working on replenishing this fund, and we are hoping to reach 90 or $95 billion for the IDA 20 replenishment. And now with all our partners here, we have agreed on a response to over-indebtedness. And so we put together a common framework for creditors, including China, for all these countries to have the common framework. So Chad, Zambia, and others have already requested to be a part of it, and it's extremely important that we have this type of measure in place so that other countries too can benefit from these debt treatment measures. And Mr. Adesina said this as well, the private sector has a crucial role to play. And it was announced at the Paris Forum, at the Paris Forum, that an Entrepreneurship Alliance would be launched to help small entrepreneurs, because large companies are able usually to find funding, but to help entrepreneurs, SMEs, and other small businesses find financing. And so with the help of the IFC, of the World Bank, there will be an effort to fund small companies and entrepreneurs. Although SDRs are significant, it is also important to attract international funding and help small companies and entrepreneurs. Thank you very much, Mr. Leroy. One thing that has really come through is that SDRs are certainly an important instrument, but they're not the only instrument. And so we have a little bit of time now to take some questions from the audience. And there's one that I would like to ask to the Managing Director of the IMF.
Ensure global access to resources when nations' leaders are elected to provide resources to their citizens first. I mean, it's more like a philosophical question about how can we pretend that countries are generous with others if national politicians have, first of all, to be accountable with their own voters. And I would like to have your perspective on this, Managing Director, because you can see things from the outside, so maybe less from a political point of view. Please.
Well, the pandemic has demonstrated that we are so interdependent. No one is safe until everyone is vaccinated, everyone is safe. And that is a very important message to all of us, that as we prioritize in countries the needs of populations, it has to be in the context of this interdependence that is morally right to help those in need, but it is also in everybody's self-interest. That applies also to the fight against climate change. And I want to take just a minute to talk a little bit more about the on-lending of SDRs, since it came through the conversation, but we didn't quite answer it. We have the target of 100 billion. President Macron, bravo, is the one that put it out in May, now reinforced by the G20. We have currently one particular instrument, Poverty Reduction and Growth Trust. It will be boosted significantly to provide zero interest, longer-term lending to low-income countries. But in light of the climate crisis, we are determined to build a second instrument, longer-term, and with a low interest as well, that would be funding not only low-income countries, but also vulnerable middle-income countries, especially island economies. That would be with the objective to grow from 30 billion to 50 billion, maybe even more. Our ambition is to have design in place by the spring meetings and implementation by the annual meetings, so we can support policies for the once-in-a-lifetime transformation to the new climate economy, one that is low carbon and, most importantly, climate resilient. And what I want to outline here is that it is a great example of this enlightened self-interest when countries with strong reserve positions on land SDRs through the Resilience and Sustainability Trust, they're fighting a crisis where we can only win if we work together.
Thank you very much, Managing Director. Thanks for your answer. We had also another question, which was still about what you just mentioned, the Resilience and Sustainability Trust. And maybe before our discussion come to an end, as Mr. Leroy has pointed out, there are some countries which still have not outlined the amount of SDR they would like to transfer. So I would maybe like to quickly ask to each of you, which message would you send to countries who have not yet explicitly taken position and said how much they will transfer. And I will start with you, President Macky Sall, please. I would start with you, President Sall, please.
Merci beaucoup.
Thank you very much. Well, first of all, I'd like to come back to a point that was made. Now, some countries believe perhaps that 100 billion isn't quite the figure that is required. Now, Africa requires $285 billion to finance its development. This is evidence-based. And Africa needs to be able to respond to the pandemic, but also fund economic recovery. And that is why I would like to thank the members of the IMF, developed countries that have joined France, the United States, all the countries that have already agreed to transfer 20% of their SDRs. And I would like to call on all countries to follow their lead, because the pandemic requires global response and global solidarity. Now, what needs to be done? Well, we need to reform international finance. The OECD is an important international organization and needs to be able to reform its export credit rules. We need to be able to develop our continent, but debt conditions based on OECD rules limit what we can do, because usually export debt is 10 years long, and so. And our assets have a lifespan of 50 years or 100 years. And so we cannot finance these within a 10 or 12-year term. And so the OECD needs to change its rules. And we need to also reform risk premiums, because the perception of risk is exaggerated. In reality, risk in Africa isn't higher than anywhere else, but there's a tendency to think that Africa is dangerous, that you need various types of insurance to invest in Africa. And so all of this makes development more expensive for Africa. And so that will help Africa grow, and we will need to be able to access blended finance with concessional financing, such as as is granted by the African Development Bank, the Islamic Development Bank. And so that blended finance, along with export credit, would help us because aid is not the solution to Africa's problems. We have more than a population of more than 1 billion, and the 20 and the amount of development aid that we receive just isn't an answer to Africa's questions. And so the question is, how can we mobilize enough resources at conditions that will enable African development? And we need to set up a win-win partnership. The SDRs are a part of the answer, and another part of it is to reform the rules. The EU or the US have set up rules that support their own businesses, and Africa will be able to access credit. But Africa needs to finance its infrastructure, its railways, and we need to set up a win-win partnership. And we need these minimal conditions to be met in order to tackle the issue of international migration as well. And so that is how we will ensure that the youth remains in Africa and doesn't choose to cross the Mediterranean or the Sahara Desert. And so it is in our interest to work together in a spirit of mutual trust. Now, some people need or haven't quite yet understood that the development of Africa is actually beneficial to the rest of the world, because we need each other. And so I think that that's important to understand. Thank you very much. And the question, in fact, of immigration and the African diaspora also has an environmental dimension that we haven't really talked about yet. And so in terms of international development and international cooperation, do you also plan to fund the climate transition? Now, we've been talking about that a lot. So would SDRs and other financing instruments also finance the climate transition on the African continent?
Well, thank you very much. I think we're all just coming in from Glasgow, and Kristalina and I were also there. There's no doubt that we live in a time that the climate change is an essential risk for all of us, in particular for Africa. Because you look at the continent that does not contribute more than 3% of greenhouse gas emissions, but actually is suffering disproportionately from all the negative consequences of it, from droughts to flood to cyclones to desertification of the Sahel, all over the place. You just have a lot of dégâts. Okay? And if you look at, just to follow up on what we said earlier, how much resources one needs to be able to adapt to that. You know, Africa will need at least $33 billion a year, right, to be able to adapt to that, right? up till, maybe 2025. Okay. Now, IMF, I think, Kristalina, your analysis actually shows that if things don't change, in fact, that could become easily $50 billion a year by 2040. So we're talking of a lot of money here. But how much does Africa actually get? Actually gets only $6 billion a year. So again, Africa is that did not cause climate change is shortchanged by climate finance. And so that really creates a lot of problems for African economies. Now, for us as African Development Bank, we take this very, very seriously. We have doubled our climate finance to $25 billion by 2025. But in addition to that, we've actually taken adaptation, because adaptation is the main problem for Africa, it's the main challenge for Africa. And so we have committed, Secretary General Guterres said that we ought to meet 50-50 parity between adaptation and mitigation. Okay, we exceeded that parity in 2018. We reached well over 50% then. In 2019, we were 55%. And last year, we were at 63% of all of our climate finance was on mitigation. Now, we also launched what is called the African Adaptation Acceleration Program to mobilize $25 billion together with the Global Center for Adaptation. Now, the African Development Bank, we basically say, well, look, Kristalina and I were in Glasgow, and thanks for coming for that session, Kristalina, for your tremendous support as a board member of the Global Center for Adaptation. We came in and said, look, we are begging here. We came in with equity of $12.5 billion from the African Development Bank on the table, and we want to raise the additional $12.5 billion. I must say that I was very encouraged by what I saw in Glasgow. We're talking about it when President Biden, through Secretary Blinken, announced that they will put in $3 billion towards degradation in Africa, but also adaptation, which is very, very good. Bezos come up and say that he will put $3 billion also towards degradation and adaptation in Africa. Fantastic. For us as African Development Bank, we were particularly delighted that the UK government provided us $2 billion of guarantees that will allow us to be able to do synthetic securitization, essentially to take some of our assets that are on our books, on the private non-sovereign books of the bank, and transfer those to institutional investors. President Macky Sall was talking about the importance of private sector. That will allow us to free up a headroom to be able to lend more for climate. And I want to particularly thank the leadership of President Macron, because on the issue of the days for Africa, those issues of the Green Great Wall, the Green Great Wall of the Sahel. President Macky Sall is one of the presidents of the G5 Sahel. Desertification is a major, major issue. And therefore, I salute the leadership of the president and the African Development Bank. We've committed $6.5 billion towards that work of the Great Green Wall of the Sahel. But in addition to that, we are also involved in another mitigation project, which is very expensive, which is the Desert to Power. The Desert to Power is to, in the Sahel, create a massive solar zone, both grid, mini-grid, and off-grid, that will be 10,000 megawatts, and that will allow us to provide electricity to 250 million people, all through renewable energy by that. Now, the reason why this is important, as you know, President Macky Sall, is that we have the wall. Energy access is very, very low. If we don't have electricity or energy, they are going to cut down all that wall. It also could be nothing more than a pile of firewood that people are going to cut down. So this is very important. Just in the countries alone where President Macky Sall, you look at the G5 Sahel, doing that alone will help us to suck out 14.4 million tons of carbon out of the air, just in terms of the great, for the G5 Sahelian countries. So I just want to finish here by saying that Kristalina mentioned the resilience, the Resilient Trust. I think that we're going to work together with IMF on this, because we think that these resources can really help us to do more of this mitigation, to do more of the adaptation work that is absolutely needed. But I will end on one thing. The $100 billion that is elusive. This $100 billion is the most elusive resource I've ever seen. To 2009, vous priez, vous criez, vous faites n'importe quoi, and you're looking for it, you can't find it. The promises made must be promises kept. I remember Kofi Annan, who was a mentor, God bless his soul, of mine. He told me one day, he said, the only promises that matter are the promises that are kept. I think it's very, very important that the developed countries meet their promise of $100 billion a year to support energy transition. You mentioned energy transition. One more last word before I give up on that one. I want to come to the issue of gas, because we are doing everything we can. Let me just be very clear. From the African Development Bank, 83% of our financing on energy generation is in renewable. We help to finance the largest concentrated solar power plant in the world in Morocco. We help to finance the Lake Turkana project, the largest in sub-Saharan Africa wind power in Kenya. We're doing Bemban in Egypt and all over the place. However, we need to, President Macky Sall is right, we need to make sure that Africa is not disadvantaged by energy transition. Look, when people say energy transition, let me give you how it looks like between developed countries and Africa. You know, if you like to go on a cruise, you go on a cruise ship. On a cruise ship, you move from one room to the other, you play this, you play poker, you play all these things. That's transition for rich countries because you have 100% electricity. So it doesn't really matter. You're going to be able to transition your energy mix. In Africa, it's almost like somebody on a pirogue, a rickety boat, trying to develop energy. If you move like this, you're going to fall. And so Africa needs to industrialize. Africa needs to use this gas. And by the way, if Africa triples the use of gas, Mr. President, if we triple it for industrialization and gas to power, we will have only added how much to greenhouse gas emission? Only 0.67%. I mean, that's it. And so Africa should actually be allowed to have affordable energy. It needs to have access to energy, and it must have energy stability and energy security. Africa has a right to develop because Africa cannot be poor in an environmentally sustainable manner.
Thank you very much. Our time is nearly finished, so just before we wrap up, I know that Mr. President Macky Sall had a very, very quick comment, so that then we can turn for the last question to
Absolutely.
Ambassador
It will
Leroy.
be very quick. Merci beaucoup.
Thank you very much. I did want to take the floor one more time and talk about energy transition. Obviously, we have really heard a great deal from my colleague. There's a real injustice, which is totally unbearable. We are the least of the polluters, and we are the ones who actually are the ones who are subjected to the worst effects of global warming. And we are told that they are not willing to actually use our resources in the right way. Our country does have resources. Gas, for example, big countries could help us to develop this. While these other countries are using polluting energies, much more and much higher polluters, for example, coal, fuel which is being used is totally ununderstandable to us that people are not willing to finance gas for us. So the IMF, the World Bank, the development banks, multilateral banks, because if gas were to be funded, this would ensure development for our continent. Thank you very much. Mr. Leroy, would you like to react to this? And could you just talk to us about the February meeting that's going to be organized? Yes, just a few key messages that I'd like to make. First of all, it's very important that all the G20 countries give 20% of their SDRs. We think this is extremely important. Some of them have done this, but everyone should. Secondly, it's also important to reinforce the capacities of the African banks, multilateral or national banks, either using on lending for the SDRs or other systems, bonds or whatever. The third one, and I think this is very important, everything that we can do to boost the private sector should be done. And fourthly, there's a huge amount of liquidity worldwide. And you can see this quite regularly. there are negative interest rates as well. Whereas in Africa, as Macky Sall said, either because the rating agencies are too conservative or because of the risk analyses are not carried out properly. So this is something we want to do as well. We want to have clear-cut facts to show that, for example, that these rating agencies are perhaps too cautious, and that it would be much useful for this global liquidity to actually be invested in Africa, with guarantees, of course, from the European Development Bank or others. But that's an important subject. And one last point on climate. I thank you once again, Madam Georgieva, to talk about this, but the Resilient Trust will be concentrating mainly on climate issues and also on health. France would like health issues also to be covered by this Resilience Trust. And also, there's the green wall, the Great Green Wall that you talked about, which is something that we're excited about as well. And as the moderator said, on the 17th and 18th of February in Brussels, normally, there will be the European Union and the African Union summit. With Charles Michel, we're working a lot about this, and also Mrs. van der Meyen and other people, with Mr. Macky Sall and others, so that these issues, that a whole package of investments on climate, on energy transition, and other issues be covered. And this would be a good opportunity for all of us to fund from the public and the private sectors. Thank you very much. We have run out of time. Thank you very much. And you can see that here we're talking about not only instruments, financial instruments, but very concrete subjects. Thank you and have a good afternoon.
Merci beaucoup à vous.